Alright, so now this is the second setup, right? As we can see, we have added a little bit more to the setup. Remember last time we had an order block and a fair value gap, but now there's a new term that I'm gonna introduce, right? So now let's analyze the whole trend, right? So taking out the lows, and then what happened is the market reversed to take out this high, right? So in the process of this reversal, there were small internal structures, right? The next video is going to be the difference between the swing structure and internal structures, and also some fractal structures, right? So we came up and took out this high, right? And then we form a new higher high, and then again the market dropped again, and then we formed an order block. Remember I said in these areas there's usually some consolidation, and then after the consolidation there's going to be impulsive movements going to the downsides. So those impulsive movements, they break out this low, right? This is a BOS. It's not a change of character, because remember on the higher time frame the market was on a downside direction. So it's more important to trade with the trend, right? The whole trend is downward trend. We are going on a downside. It's a bearish market, right? So the only reason why this is a break of structure, not a change of character, is because when we took out this high, this was not a change of character. We were not changing a direction to go to the upsides or upwards direction, right? So we just took out this high, and this is how the market always plays out. So we have fair value gaps because there's going to be impulsive movements to the downside, right? But then now what's new is in the process of going to retest the order block, we're going to form two highs, right? And those highs are trap zones, right? Because a lot of traders, they always trade on the fair value gap. So they wait for the market to reach the fair value gap and then take a short. But now remember, this is a trap zone, because after forming these two highs the market is going to take them out again. So this is what people call inducement, right? So the market created a high and it created the second high, but then it took out both of them. So this is one of types of liquidity we have on the market, right? So after forming these two highs we take them out. So as a supply and demand trader, you don't trade on the fair value gap, right? What do? Is you wait for the market to take out these highs right here. You wait for the market to take out these highs, right? Some people call it inducement. Let me write it. So some people call this inducement, when the market is creating two highs and take them out to visit our order block. And most of the time it's usually one high, right, which forms a liquidity. And the reason why there's sellers in this area is because we know there are people who trade on fair value gaps, and there are people who trade an SR flip, a supply resistance flip. So they call them supply and resistant traders. So if a market forms a low and it takes out that low, the traders are confident that we're gonna react on that low and then we drop. So that's why we have a lot of sellers or selling positions around this area. But now one of the market traps is forming these highs and take them out and visit our order block. So that's where demand and traders will enter. Remember, we always enter on the order block or on the supply zone. Some people call this area a supply zone, but what it is most important is that it is characterized by an order block, right? So this is where we enter as supply and demand traders. We wait for the market to take out all these highs and get into our area, and then we wait for a change of character, and then we enter on the market, right? So another thing is, when we get into an order block, we don't just blindly enter the market. We have to see a change of character in our order block. Then that's when the order block is confirmed that it is continuing the market, and then we take sales, right? So this whole trade or a trend is basically a continuation. It's not a reversal or anything. It's a continuation of the bearish market. I hope I can write it here. Hopefully it's gonna be clear, right? So this is the bearish market continuation. In bearish markets, we are looking for sales. That's why we entered on the valid order block, right? Some people call it a supply zone, but what is most important is waiting for the market to trap the fair value gap traders and the SR flip traders. Then that's when we enter on the order block once this inducement is taken out, right?